This is dumb. This is a stupid setup. I'm hardlined into a laptop. I have a computer on top of a shoebox. This is dumb. This is just dumb.
Hard. Like every once in a while you hear a sentence that you don't think anybody's ever said before, and I think you just said one of those. Like, man, I'm hardlined into a laptop and I got a computer on a shoebox. Like, there's 0% chance anybody has ever said that in the history of mankind. 0%. Clip that.
Oh my god! All right, that's how it starts.
Why are you in a shoebox, my man?
I don't want to get into it, but it elevates my computer. It makes everything look better.
Okay. That makes sense.
Well, welcome to another episode of More Than Mortgage. Kadyn and Indy here with my co-host, Nate. Watch out for that Gator Fane.
Woo! Don't watch out for the Wildcats. I'll say that.
They lose?
Dude, lost by... We were like a 20-point favorite last night to South Carolina.
Oh, that was last night?
At home.
I saw the odds. They were plus 1,400, South Carolina.
Dude, and I think that was like maybe the third or fourth time that South Carolina's ever beat us at home. And I was actually there for one of them. It was in 97. I was like 10 maybe, but it was senior night. And I remember Rick Pitino was our coach then, and he got tossed. And it got ugly. You probably don't know who Ron Mercer is. He was like a legend at Kentucky, and he played in the pros for like a little bit. But that was like his senior night. I think he might have been like a sophomore or junior. But yeah, that's the last time I remember losing to South Carolina at home.
Not good. No, I saw the quick clip of it. I didn't know the context, so not good. Calipari moving sometime soon. Tejas. Well, thanks for tuning in and listening to us yet again. Nate obviously is upset. Wildcats, they're trending down.
Very much trending down.
But he's very proud. He's still wearing his jacket.
Listen, I got this for Christmas, and it was very expensive. So this is in support of my mother-in-law for giving me this for Christmas. Shout out Sandra.
Shout out Sandra. Well, let's hop into we both have our topics for what we learned this week. You want to go first? Because I think mine kind of could piggyback yours if you want to start.
So there is a article that I came across earlier this week from CNBC, and it is, let me get the title of it. Does checking your credit score lower it? Plus 12 other common credit score myths debunked. And the general premise of the article is it talks about a lot of the credit misconceptions that are still out there. And I think a lot of it had to do, a lot of the data came from polling millennials. So this kind of hits home for me because that's my generation, of course. And, you know, it's frustrating for me because there's so much misinformation out there and misunderstanding out there. And you've probably felt this a gazillion times. But one of the biggest hesitations, you know, and I like that they start with this as the first one. And the first one is checking my credit score lowers my credit score. And of course, like if you as the client, as you as the consumer, check your own credit score, that does not affect your actual credit score. When you go to a lending institution or some kind of someone who's possibly going to extend you credit, that's when it affects your credit score. Yeah. And even then, it's like a very small amount. I think there's still this big misconception that like it's so detrimental to your credit if you get your credit score pulled. And don't get me wrong, like you shouldn't just go around having everybody and their grandma pull your credit. Yeah. But there's a lot of hesitancy with a lot of clients that I've had in the past, and they don't want to pull their credit because they know that inquiry is going to show up and ding their credit a little bit. Understandably so. Like I appreciate and can respect the fact that they want to do what's best for their credit. However, that 2 to 5 points, or you know, it's so small that it takes. I mean, I try to explain it to people. It's like calling a mechanic on the phone and describing a noise or describing what your vehicle's doing. Like they might be able to diagnose a little bit, but for them to really do their job, you got to bring it in and they've got to pop the hood. They got to look underneath the hood. They've got to run some diagnostics on it. And we as lenders really can't do that until we pull your credit. I mean, and now like you've got some folks that are able to do a soft pull, like we introduced that. But in all reality, a lot of times like a hard pull, it is more expensive, but it's better data. If you know someone that's like really rock solid with credit, I'm okay with a soft pull. That's fine. But by and large, like a lot of people could still probably benefit from a hard pull. And I try to explain it this way. So let's say that you are 6 to 12 months out from wanting to buy. I still like the idea of you going ahead and starting that conversation with a lender because it gives you time to possibly fix any problems that you may have down the future. Think of it like a yearly checkup or like a biannual checkup. That's the way that I look at that. And in any credit counseling I can give you after I pull your credit and get a look and see like what we're looking at, it's going to more than make up for the 2 to 5 points that's bringing your credit score down based on that inquiry. So to me, the thing that I learned is like, damn, man, there's still so much misinformation. There's still a lot to learn out there when it comes to credit. When the general public, they still don't understand it. And that's frustrating to me because it's so important. Like if someone who understands credit is just such a big leg up in life when it comes to finances. That allows you to leverage yourself.
Yeah. And the quick response I have is everyone thinks that like, oh, I get my credit pulled once and then I'm screwed. And it's not the case. I've had several people where they wait longer than the 3 months to purchase a home as they're looking and their credit goes up. Right. So riddle me that. You get your credit pulled and your credit goes up. There's so many other factors that it's not just inquiries that do it. It's if you're still keeping a good history and your history is still expanding at a good rate, then it never hurts. And I know someone you work with, and it's forecasting a future guest, but Rebecca talks on this a lot, and educating people. And, there's the window, which I think the actual time frame you have to check with other lenders where it doesn't truly affect your credit, it shifts a little bit, but I mean, I think you're safe to say within 10 to 14 days, you're going to be fine.
I try to tell people within 14 days because that's the least amount that I've seen. I've seen up to 45, and a lot of it, when we get into the nuts and bolts of that, it's more about what model of FICO that they're using. And there's a lot of other factors that I can't speak for every single lender and every single person. So I like to try to keep it at that 14-day mark just to be safe. Last thing I want to do is for someone to go on like day 28 and we're using a model or another lender is using a model that is actually on that 14-day wait period. So I try to tell people, you got a week, 2 weeks to really kind of figure this out. And like you said, I mean, the credit inquiry is such a small percentage of your actual credit score. The payment history and the credit utilization, those are the big drivers of your credit score. That's 2/3 of your credit score right there. That's really what most of America would really benefit from paying down and keeping a lower balance on their credit cards. Yes. And that was another another myth that was debunked on here. Is that one, your income impacts your credit score. There's no income on your credit report whatsoever. No. You could make I've seen millionaires that don't have great credit, and I've seen people that make $12 an hour have phenomenal credit. It has no bearing. Your debt to income has no bearing. It doesn't change whatsoever. Last one I wanted to hit, and then we can get to yours, is carrying a balance on your credit card boosts my credit score. This is like the biggest misconception because, again, like this goes back to credit utilization, and a lot of people don't understand this. So a lot of people are aware that you don't want to charge up your credit card and max out your credit card. I think most of America knows that like that's bad for your credit. However, a lot of people think that they have to carry that balance and pay interest in order to reap the benefits of using a credit card, where that could not be further from the truth. So it's like you want to know what the report date is, okay, when your statement closes, and then the due date. So the report date is when the credit card company is going to report whatever the balance is of your credit card to the credit bureaus. So most of the time, that report date is going to be before your due date. I'm sorry, after your due date. So that way, you don't have to carry a balance, because like if you wait until the due date to pay it, like, hold on, I've said that wrong. We're going to cut that out. So
too late. We're live.
Yeah, we're live. So a lot of people think that, okay, I have to carry that balance to reap the benefits of that. But in all actuality, they don't have to. You can pay it off in full, and in fact, like that's advisable to pay it off in full so that you don't have to pay that interest.
Mm-hmm.
You don't have to carry that balance to reap the benefits of that because that balance is reported before your actual due date.
And I will say I have, and this is based on to go against, and this is me still learning. I have passed that information along because running simulations after trying to improve credit scores and whatnot, based on wayfinders and whatnot, sometimes it likes you to have 10 to 20%, but it might be based on, there's other factors at play. It might be based on, oh, you have like no good credit history. Maybe we need to show that you can carry a balance. I don't know. I have passed that along to people, but I mean, ultimately we're saying the same things, whether you just have to make sure you're paying it on time. And that's the biggest one I tell people is you need to understand, you have this idea of pay your bills, end or first of the month. And you're already late at that point because most of these statement dates from what I've seen are in the early 20s of the month, 20, 21, 22. And if you're making your payments before then and getting your balances to where you want, you're going to find success.
And we'll link this article because it's worth the read. There's so many great myths that get debunked so that you can kind of you can learn from that and really realize that like the thing that I hate about it is like people think that if you have to carry that balance and not pay it off at the end of the month, well, now you're paying interest. So
yeah,
it's just throwing money away. And that's another reason why credit cards get a bad rap. The credit cards can be so good for your credit if you are disciplined and know how to use it.
Yeah. How many times that people don't have a credit card, you add one credit card and their credit score shoots up. It's crazy.
Have it for 6 months even and just like, wow.
And then segueing into mine, why I wanted Nate to go first, I'll elaborate on this a little bit more, but to just trying to explain things better. So I think I passed along, I put it in quotes and you thought someone else quoted this, but or said this. So I said, looking off camera here, if you can't, this is what I learned this week. If you can't articulate in a simple way what someone should do, and for example, in this case, mortgage, anything mortgage related, if you can't articulate what someone should do in a simple way, they will go get the info from someone else who is less educated, who can answer or give them those answers in a simple, easy way. It's gotten easier through social media and Instagram to get short, concise information out. I think I still need to work on that on phone calls and just the day-to-day conversations, because if I'm not prepared, I go into mortgage nerd mode, and you can lose people. And then I know I have to apologize because my brain starts going. But if for example, credit, if we can just explain things in a simple way, it goes so much further with people.
Sure. Well, and so I've learned that a lot of times if phone calls catch me off guard, I might answer them and say, hey, like I'm in the middle of something so that I can give you my full attention. Can I call you back in X amount of time? Mm-hmm. So that That's I know good. That I'm absolutely on my A game instead of answered it like frazzled because I'm in the middle of doing something else, whether that be working on another file, whether that be helping a loan officer on my team or making content. It goes back to that, like structuring your day and kind of time blocking. But and 9 times out of 10, the person on the other line's like, yeah, for sure. Like that, take your time. Very few times is it like a emergency, everything's on fire situation.
Mm-hmm. Absolutely. But no, being able to explain things, like I've used metaphors of buying hammers before and it works. Like, I think someone asked like, okay, so with interest rates, I think this is the last thing I'll say. With interest rates, a common misconception is like, oh, if I pay $1,000, it brings my rate down 0.25%. Well, if I pay an extra 1,000, does it bring it down another 0.25%? No. So the further you go down a rate sheet, it gets more expensive. So I explained, if you go to this is off the top of my head, so if you go to a hardware store and you have a cheap, middle and expensive hammer, they're not always 5, 10, 15. Mm-hmm. Sometimes it's 5, sometimes it's 20, and then it's 25, 30. It's the same thing when it comes to rates.
Makes sense.
It's really dumb, but it makes sense.
I don't know if I've ever.
Two things. It could be anything.
Well, that's one of the fun things about doing this around people, other loan officers, and hearing what they say. I mean, I've worked with some guys and gals that I worked alongside them for 4 years. So if I had my door open or something in my office and I heard the phone ring, like I could almost word for word tell you what they were going to say in their phone conversation. Yeah. But it's because they found some kind of formula in a concise way to explain something.
Mm-hmm. And over time, I'll figure out some more. But as for now, I'm sticking with hammers in a hardware store.
There you go.
So dumb. Well, let's move on. Let's bring in our second overall guest to More Than Mortgage. Someone that's a little prelude into bringing him in. Someone I've known since I became a loan officer, so for over 2.5 years, and I just talked to him for the first time yesterday. So, let's bring in Dylan.
Hey,
there he is.
Can you guys hear me?
Still waiting for him to come in. Hold on.
I got you. I think we're waiting on Kadyn to get at you.
Oh goodness.
Wow, Kadyn.
There we go.
Get your good Wi-Fi in check, brother.
When you go back and listen to this, I will say it one more time. I am hardwired into the office right now because I couldn't figure it out. That's why we're running a little late.
No worries.
Old school.
Yeah.
So how you doing today, Dylan? I guess quick introduction. We have Dylan Langei. Please say your last name for me because I feel like I always get it wrong.
Yeah, it's Langei.
I said Langei for a while.
Everyone says Langei, Langei. Yep, I get it all. So no worries. You're not the only one.
Okay, good. We have Dylan Langei. He is a branch manager with Evergreen Home Loans up in Bellingham, Washington. Dylan and I know each other from when I first started at Umpqua Bank. We knew each other through there. And like I said before you hopped on, known each other for a while. First time talking was yesterday. So I'm excited to have you on.
Yeah. Yeah. No, thanks for having me, guys. And yeah, I know when we synced for a little bit yesterday, I told you guys this. I think you guys are producing some awesome content. I'm super, honored and delighted to be on this. I think there's not enough loan officer focused content that's helping other, newer, younger, whatever you want to say, just in loan officers that are just newer in the business, even ones that have been in the business 10, 15 years. I think we can all adapt to the market and kind of, get new marketing tools and new ideas from each other and share those ideas. So what you guys are doing is awesome. I just really appreciate being a part of it.
Yeah. And we appreciate you. I mean, I told Nate just on our 30-minute call yesterday, I already learned so much from you. So I'm happy that you're on and we're able to share the information we potentially talked about yesterday and kind of go over everything and listen to your story and tricks and tips or whatever as you've worked your way through this industry and done it very well. I believe, you're a $50 million producer. You do. I know you do things the right way as well. And I, like I said, I know you through other people, so I'm always able to follow along. And I know there's the passion there for what you do. Yeah.
Hopefully nobody judges me for having the old school iPhone, plug-in headphones. My speaker didn't work today, so that's my excuse. I have an official microphone, so hopefully my audio is good, but my speaker didn't work, so I wouldn't be able to hear you guys. So like Kadyn,
it's retro.
Hardwire in, but I don't have like the cool, big headphones like you. So $50 million producer, but can't get the cool headphones,
You only get that if you're the producer. Those are the producer headphones.
Oh yeah,
right.
Nope.
Yeah, send me a set after this. That's my fee.
Okay. Perfect.
Before we so were y'all in the same market when you lived in Washington? Were y'all in the same market?
Yes and no. I mean, honestly, there's a huge difference between north of Seattle and south of Seattle.
Oh, okay.
So we were in the Seattle market, but they're two different worlds. Again,
Kadyn,
close enough to know the same people.
Right? You were in
yes.
Puyallup?
Yeah.
Yeah,
Puyallup.
And I'm up in Bellingham. So, I mean, that's 2 hours away, which seems, maybe not that far. But I would say 99% of my business is in Whatcom County. It's not a lot, even south of Whatcom County. The majority of my business and my team's business is predominantly in Whatcom County.
And you totally take care of I follow you, I follow Nick. I don't know anyone else who's in your branch, but I know you guys do a lot of business in Whatcom.
Yep.
Just following
we like
along,
to say we dominate it.
I would think so. Well, I guess let me pass it over to you, and I can ask you a few questions just so people can get to know you a little bit. But I guess a quick background on you, how long you've been in the business, what you learned early on. But let's start with that. How long you've been in the business? I know you'll take it away from there.
Yeah, so I started October 6th of 2015. So 3 days after TRID. I know Nate will nod to that because I only knew TRID. You know, I never knew this GFE thingy or whatever you old folks called it back then. So, you know, I learned it the right way. But yeah, I started 3 days after TRID. But taking it back further than that, because I think it's always fascinating to me how people got in the mortgage space. And I think it's important for whoever's watching this and listening to hear those different stories, because there's not a degree in college to become a loan officer. There's not any classes in high school. There's no tech colleges, right? There's really nothing. There's no playbook for this business, which I think is really cool. I think there's a low barrier to entry. And I don't say that negatively. I think that it honestly welcomes a lot of different perspectives and a lot of different people. And I'm sure we'll dive into, you know, the right way to do things. But, you know, just taking it back, I grew up in Bellingham. I mean, I went to elementary school, middle school, high school here. Also went to college, Western Washington University, did my undergrad in business. And then I also did my master's degree at Western. And funny enough, when I was in between undergrad and grad school, I actually was interviewing at a bunch of realtor offices here locally in town. My kind of idea was, hey, maybe I want to dabble and be a realtor. My parents have been in banking for years and years. My grandfather started a pretty prominent credit union here in Bellingham, has over $1 billion in assets now. He's since retired. But my family, you know, came up in the credit union banking world, and my dad was like, hey, maybe become a realtor, you know, just kind of dabble, see what it's like. And so I was interviewing at a few different places and kind of decided I didn't want to grow up yet and wanted to go back to school. You know, I didn't want to find a real job. So went back, got my master's degree, graduated with that in the summer of 2015. And traveled Europe for a month. Yeah, it was like a month. No, 2 months. It was about 2 months. Spent all my money. Lived out of a backpack. You know, really, you know, this was not lavish Europe living. This was hostels, you know, $20 hostels and sweating through your sheets when you're in Paris at 115 degrees. And so, yeah, I really appreciated doing my own laundry when I was gone, and, you know, really wanted that structure back. It's funny because when you're in college, you're like, I want to travel and not have any structure, right? My life's been structured. And then I was just itching for that structure. And so I was interviewing at a bunch of tech firms down in Seattle. That was the dream. That's kind of Bellingham. We're an hour and a half north of Seattle. And right, they got ping pong tables in the break room and kegs and Xboxes. And right, you graduate college and that's like the dream. And I think the jobs were $40,000 a year starting, and an apartment's like $3,000 a month. And you maybe make a little commission, and you start doing the math and it just didn't make sense. And also I wasn't getting hired. So let's not sugarcoat it. It was a very turbulent time. I mean, I thought with a master's degree, everybody's going to want to hire me. Like I'm personable. Like I'll learn this company. I'll learn this product. I've got the degree, but they're like, either you're overeducated or you don't have enough experience. I mean, how many people have heard that? You don't have enough experience. Well, yeah, I just graduated from college. So I went through that. Fast forward, somebody I knew was neighbors with a loan officer that's actually now on my team and I technically manage. And I had met her at different, you know, kind of family events because she was neighbors with actually my ex-girlfriend's parents, and messaged her on LinkedIn, slid in her DMs and said, hey, you know, I'm looking at maybe getting into mortgage. Right. My parents had, you know, worked at a credit union, so they kind of knew that space. And set a meeting with my now regional boss, Demi Hartman, who's the branch manager, which is now my position. And Kadyn, you know her as well. She was your
met with her as well before I joined.
Regional. Yeah. Yep. Yeah. She's a badass. I mean, totally just, yeah, you guys should have her on. I mean, she's just killer. Been in the business many, many years. super awesome gal. And she's like, hey, I'll take you on. You'll sit next to me right in my office and I'll teach you everything I know. And at that point, I'm a college graduate with, 47 cents in my account. I'll take anything. So I got, you get a little 6-month runway, I think is what it is, or 4-month runway with, enough to pay your rent basically. And then after that, boom, you're 100% commission. So I dove in, that was October 6, 2015, worked as a loan officer and, kind of built my business, took over the branch in 2018 when Dini was promoted to the regional manager. And ever since then, I've been a producing branch manager. Kadyn, as you alluded to, in 2021, that was, of course, everyone had a great year. I did about 50 million last year through October before I transitioned to Evergreen Home Loans. I did about 35 million in personal production, which is it was almost 70 units. And then my team, I've got about 14 loan officers. We did about 330 million in 2022. The year before that, we did over 500 million. So yeah, and I don't say that to pat myself on the back. That's a huge testament to what Dini built and kind of what I took over and continue to grow on. And my team is just awesome. I mean, totally dominates the Whatcom County market, and just super proud to be a part of that team. So
a couple things I'm just like, I'm wildly curious on a couple things. So if you can somehow think back to like your first maybe month, what do you remember what it was like starting right after TRID was enacted? Like, was everybody in that office? Was everybody's kind of like hair on fire? Was there like a little bit of like mini panic when you came?
Yeah, what's funny is
people
were coming to me to figure out TRID because that's what I learned it on, right? Through my training with Umpqua Bank, I learned it that way, right? Because it was 3 days after TRID happened. So I had seasoned LOs, 20, 25 years in the business. Like, dude, I don't understand this, man. Can you help me with this? I'm like, I don't know what I'm doing. I've never even bought a house, right? Like suddenly I was in this mortgage space. I had never bought a house before. I didn't know. I mean, I knew what credit was, but I never pulled a credit report. I'd never calculated anyone's income. I didn't even know the vast majority of different ways people could be compensated, right? You start seeing commission, W-2, tax returns, 1099s. I'm like, what? I mean, the acronyms in mortgage is just that alone takes a month to learn. 1003. I'm like, just fill in an application. Why is it a 1003? Right? So, yeah.
That's wild to think. I mean, I remember when TRID first started, I remember about a month or two in, I started calling around to other buddies at other shops. And we were kind of like trading notes like, hey, man, like, how are y'all treating this? Because there was still like some unknown and there were some gray areas there. And not that anybody was doing anything shady. It's just like everybody's compliance departments, they were interpreting things a little differently. So like I remember one of my buddies, like they had to be clear to close before a closing disclosure would go out. Like, and so they were panicking because they're like, man, like we got to get a clear to close 3 days prior to closing, which sometimes in Florida can be really hard because of property and insurance issues. I'm sure it's like that in some other states too. That's just what I'm familiar with. Yeah. But it was interesting to see like everybody's take on TRID, and then so seeing that and coming into that, I've always wondered just like if everybody felt like their hair was on fire. But that's hilarious that you were like the TRID master, just
TRID expert. Yeah, I should have charged, honestly, for my consulting. But,
it's a good TRID consultant.
But you're just happy to get the attention of like, oh, these guys need me. Okay.
Right.
Yeah. Right. I mean, the biggest thing, right, is salespeople. I hate calling us salespeople. We're relationship people, but I'll just call it salespeople to make it simple. Mm-hmm. They hate change, right? Realtors, loan officers, financial planners. It doesn't matter, right? We do not like change. We want to come into the office, see the same person at the front desk, have the same operating system, have the same email format, have the same branding. Like we do not like to adapt to change. It's just we're being pulled in so many different directions that when you get something like TRID thrown down your throat and compliance doesn't even necessarily understand it, it was rocky for sure. But I was glad that everybody was kind of freaking out because it made me, the new guy, not look like such an idiot, I guess.
Yeah.
So
because everybody was freaking out.
Yeah.
Well, so my next question, because I'm wildly curious with this, I didn't take any business classes in college. I don't have my MBA. I was going to be either a teacher or a physical therapist was another thing that I was thinking about doing. But ultimately, like I got a degree in journalism. I thought I wanted to be a sports writer. So I've always been curious. Like, do you think any of the business school or possibly your MBA, do you think that helped propel your career whatsoever? Or do you think that it's just like maybe you learned business a little bit quicker and how to run a business a little bit faster than, say, someone like me?
It's an I've thought a lot about this, right? And about the necessity of college or even, graduate degrees. Because now, we talk to our folks and college was not the norm, right? A high school degree was the norm, and then you work at the same company for 30 years. Now it's like, okay, a 4-year college degree is kind of the norm, and a grad degree is like, wow, okay. I imagine suddenly the grad degree will become the norm, and a PhD will be a wow or whatever.
Yeah.
I would say when I look back at my collegiate years, and undergrad and grad school, there is nothing that can prepare you for the mortgage business.
Okay.
And nothing that can prepare you for owning a business. It doesn't matter if you want to open a mechanic shop, a smoothie shop, whatever. Like, yes, there are some fundamental things that I learned in my undergrad and in grad school that were very helpful. How to write a paper, which transfers into how to write an email, how to communicate, right? I did a lot of presentations in front of people, right? How to communicate effectively, how to work insane hours, right? I had 2 jobs at the time, working, also having to keep up with my studies in grad school, how to work insane hours, how to become more efficient and more effective. It's not like I learned some secret sauce, though, that's, like, oh, hey, apply X, Y, and Z, and you're going to be a successful, entrepreneur at whatever you do. Right. Because every business is different and every loan officer is different, which is why I think this business is so cool, is that you can become successful in this business by a variety of different avenues. You could do video content and social media stuff, like you guys totally kill it at that, or you can just be a really good direct mail person. There's just so many different avenues that somebody can be successful. I would say with the undergrad and grad school, I did learn to kind of put a business plan together. I am a huge, huge believer in business plans. I tell my team, I don't care if you write it on a napkin and it's 3 bullet points, or if you write it on a Word document and it's 300. It needs to be in writing. You need to be able to reflect on it when the year is over to be able to set your next business plan. So yes and no. I think there was a few key elements that I learned, but this business is so unique that I didn't learn about credit, income, assets, debt to income ratios, loan to values, loan programs, how to court realtor partners, how to, build a brand. It's really, you kind of learn by doing in this business.
Right.
And by people like you guys and us, right? Sharing content, sharing ideas. That's what I've learned. There's a lot of great people out here with a lot of great ideas. Don't reinvent the wheel.
Well, and that's what I love. I'll echo what you said about loving how there's so many different ways to succeed in this business. I mean, I always say it, and this is a Southern term again. There's more than one way to skin a cat. So, like, I know people who have vastly different business models than I do, and they look at what I do and they're like, that's weird. And I look at what they do and like, that's weird. But the cool thing about that is you can cater your business to your personality and to your talents and to your stuff that you're passionate about. And that in turn can turn into business. I tell people all the time, like when it comes to marketing, consistency is everything. But the good news is like everything works. It may take longer for some other stuff to work. But I mean, like, if when tax time comes around, you're going to see in some areas of the country, you're going to see people dressed up like the Statue of Liberty and out there with a sign, talk about how like prepare your taxes here. Like that works. There are television commercials that are going to be running. That works. Now, I would probably lean towards the television commercial here personally, because I like the digital media aspect of it. But the bottom line is, like, if it didn't work, then they wouldn't be hiring someone to go dance on the street corner in the Statue of Liberty costume.
Yeah. What I think of, sorry, Kadyn, what I think of when you say that is, to that point, right? And if there's any new loan officers or loan officers that are just lost in this market, right, are doing their business plan, not sure what to go after, know your target demographic, right, of your realtor partners, your clients, I'll just say referral partners, not just realtor partners, but your referral partners and your clients. Know your target demographic and tailor your marketing and your advertising to them, right? If I'm opening a brand new bar in town, I'm not going to go pass out flyers to the local high school because they can't drink, right? Like, so tailor your marketing to that target audience. And, whether that's first-time home buyers, whether that's, different generations, Gen X, Gen whatever, like it could be TikTok, it could be Instagram, it could be direct mail, it could be going to, different employers and teaching first-time home buyer classes. Like, there are so many ways to skin a cat, to use the Southern term, but also if your target demographic is you really need to hone in on that, because when I was early on in my career, in my business, I tried a billion things an inch well, rather than doing 5, 6, 7 things 110% well. So that's my big advice to people that are lost in this business, new in this business is, there's a lot of great ideas out there. Don't try them all, right? Figure out what your target audience is, that target demographic, figure out a marketing branding campaign towards that. And also, you need to like it and be comfortable with it. Don't do things that make you uncomfortable. I don't like cold calling. I don't cold call people. That's just not what I do. I like to build relationships. I like to, we got a new indoor golf facility, right? Go there, play pickleball, go golfing, play soccer, right? Go grab a beer, whatever it is. Like, those are things I like to do. And that's what I'll do with my clients and referral partners. That's how I build my business. So yeah, that would be kind of to your point.
And that I worked for a guy named Richard Lanassa, and he taught me, this was early in my career. He got a lot of business from playing tennis with referral partners. And they weren't just necessarily realtors. So like a lot of the gut reaction for a lot of loan officers and branch managers is to just, hey, go after realtors. But when you really, if you become more ingrained in any kind of community, like, those people can become advocates and referral partners for you as well. And he told me, he's like, man, like, for sure, like, go play golf with realtors, because that's what I did. I was a decent golfer back in the day. But also, like, go meet people at the club. Go, when you play golf with people, like, go play golf with a ton of people, and don't be afraid to market yourself to just the general public as well. Because it doesn't just have to be with a realtor or with a CPA or whatever. It's you said this earlier, it's a relationship business, and you don't have to pigeonhole yourself into just one type of demographic that you're performing a relationship with. Go find something that you're comfortable doing. Do that, because you're going to be, that's what was the huge for me, is like, I feel comfortable on the golf course. I don't feel comfortable sitting down with a complete stranger at lunch. That's not me. Like, I'm just not wired that way. That's so awkward for me. But me going out there and playing 9 holes of golf, it takes 2 hours versus an hour and a half lunch. Like, it's about the same time. But I get to show off a little bit of my skill. I'm in my comfort zone. And normally the relationships get formed a lot quicker that way.
Yeah. And then, so going back to what you said, Dylan, of like, for a while you were doing things, I think you said like an inch deep. Is that what you said?
Yeah. And I had to say an inch because I was doing this. So if people are like listening, not watching the video, but yeah, right. Like, I was doing 1,000 things, an inch deep, or 1% well, or 10% well, however you want to quantify that. Yeah.
And I was going to say, to reflect on that, I'm totally in that position right now. I realize that that's what I did all of last year, because you're just trying to figure it out. And my motivation for this year is, very much what Nate did with golf. Like, what are the things I like to do? Cater meeting people around that, because what's the point of introducing the not 100% you to people? Like, why put yourself in an uncomfortable situation for them to then go, well, that was kind of awkward. Like, just don't even do it. Go, you can totally, and the beauty of this business is like, there are so many opportunities. And to kind of also go back to what we were talking about, there's so many different jobs within the loan officer profession. For Nate and I, we've turned into video editors, graphic designers. You turn into a marketer. You turn into, for you, you're like CEO, business planner. And then as well as you tack on branch manager and you start looking after other people. But as you kind of built yourself up in this business, is there one thing that you enjoy the most that just was like, this is for sure the best part about being a loan officer?
Yeah, that's a great question. I'll start with to your earlier point. This business is, I always use the analogy of dating. And it's tough because sometimes I bring people on the team that are married or have a significant other. And I'm like, it's just an analogy, but this business is like serial dating. You are going on blind dates, essentially, with whether it's referral partners, clients, whether it's a phone call, whether it's a lunch, whether it's the golf course, right? Do something you love to do because you'll feel more comfortable and you'll be yourself, right? To Nate's point, golfing rather than going to lunch, right? Kadyn, whatever you're trying to hone in on, what do you like to do, right? And so that's where I was so scattered. Every loan officer is so scattered when they start. It's just, you also don't really know what you don't know. But it's like serial dating. And I think, not to go off on too much of a tangent on this analogy, but, how many times have we met with a referral partner or with a client and not followed up? Like, our business is just known for that, being terrible at following up. Well, if you go on a date with guy, gal, whatever, and you just never call them or text them again, is that relationship going to work? Of course not. Right. So that's what I try to tell my team. And I try to implement myself as well, is if you had a great meeting, right? I'm very systematized. And that's, I guess, let me tie it into your question. That's what I love about this business is it takes two pieces. You have to be personable and you have to be organized. And I love having that balance. And I don't want to just sell, build relationships all day. I like to also have that organizational piece. And so, I'm actually building something just internally called the circuit, where it's really all these habits, good habits that I've created from, networking to closing a loan, right? Every single step. And I'm writing it all out. Where when I meet with a referral partner, there's a 12-week program that I follow. And if you guys have heard of Steve Kyle's Carl White with Mortgage Market Animals, fantastic podcast. Anyone that's listening to this too, highly, highly, highly recommend it. I kind of ripped it off of them, but then twisted it and made it my own, right? That's what, back to my earlier point. Don't reinvent the wheel. Make the wheel your own. But it's a 12-week follow-up program where after we meet, I send them a little gift based on our meeting, right? If we go to the golf range, maybe I grab them some Pro V, golf balls. Hey, these are my favorite golf balls. Or, a golf glove because theirs was ripping, whatever. It's a small little thing. And then there's a 12-week program after that where I'm following up, checking in on them. Just like dating. You cannot go on that first date and the date goes great. And then I just never text the girl or never call her or never set up the second date, right? I think the most important thing about the first date is to set up the second date. And that goes for referral partners and clients. So kind of beating around your question, I just think my favorite part about this business is you can build it however you want. And there's a lot of ways to be successful, but the way to not be successful is doing 100 things, 1 to 10% well. It's doing 5 to 10, 110% well, and sticking to them and building on it year after year. Every business plan, I have my big hairy goal, right? One a year. I don't have 12 a year. I have one a year. And mine this year is to finish building the circuit and fully implement it. last year it was integrating my loan officer assistant who I just got. So every year it's something different, but I've now created, 7, 8 incredible habits because I work on them for the whole year. I don't try 10 things, right? 10% well in the same year. One thing once a year, but it's a big thing. It has multiple pieces and action items, but it's one big thing that I implement every single year. And now I've got, 8 big things that I do really well. And I'm going to have 20 more when I'm in this business, 20 more years. So
love that.
Well, yeah.
And this next part is not sponsored yet, but you mentioned
Loom.
on our pre-pod.
I love it. I'm drooling right now, Nate. I'm drooling. Ask me.
I waited like 30 minutes to get into Loom. I held off as long as I can. Now I just want to release the reins here. But tell me, I've recently gotten into using Loom when it comes to breaking down loan estimates or different payment scenarios. But I liked what you told us yesterday about how you use it for pre-approval. So talk a little bit about on how you leverage Loom, because based on our conversation yesterday, it really sounds like that was one of the biggest tools in your career so far.
It was, and I implemented Loom sometime either early last year or end of 2020. So it was a little bit, of a COVID influence, which, a lot of our pivots in this business have stimulated from. But Loom is essentially, for those of you that don't know, and you can just go to loom.com, and Nate and I we don't own any part of Loom. I should, because I swear I'm up in their users. It's basically a video sharing software where you share your screen on your computer. It's got a little bubble of my face. So kind of like the dual feature on Instagram, where you can show your face and show what's behind your camera, but essentially you're showing your computer screen. The very elementary version of when I started using it was exactly that, to go through loan estimates. I found that the loan estimate was one of the most confusing documents and the most important documents to a consumer. Mm. Nobody understood it. Nobody. There's some loan officers that don't understand them, to be honest with you. And so what I was finding is that I would, like every loan officer, would just send out the initial loan disclosures, and an LE would be in there, a loan estimate. And, Mrs. Smith would call me, "Hey, Dylan," and I'd be on the phone with, another borrower, have to hang that up, jump off, or I'm on a different call, right? Stop what I'm doing and then answer Mrs. Smith's questions about the loan estimate. Then I got to pull up Encompass, pull up the LE, figure out what she's asking about, answer the questions. Now, Mr. Smith gets off work at 5:00, and now he's got questions because Mrs. Smith couldn't explain it well enough to him. So now I'm talking to Mr. Smith at 5:30 p.m. And now Mr. Smith's dad is curious because he's not sure, because he's gifting Mr. Smith $20,000 if he's making a good decision. So now I got, Grandpa Smith calling me at 8 p.m. wanting to know about the LE. I mean, every loan officer hearing this is shaking their head, right? That we all have been through this. So what I thought of is why don't I just record myself? Because what I was doing is I started just typing big emails about everything I thought they would ask. And it would take me 30 minutes. So then I just thought about, well, gosh, why don't I just shoot a video, scroll through the loan estimate, highlight everything and what's going on, and then just send that video to the client. Now the client, Mrs. Smith, can share it with Mr. Smith when he gets home from work, and then can share it with Grandpa Smith, right? And now everybody knows, and they can play it, pause it, stop it, watch it at 11 p.m., watch it at 7 a.m., whenever they want to, right? So it was a convenience thing. And then I started thinking, gosh, if I can use Loom for this, what other efficiencies can I create by using video, right? And this is not at first, this was not an outbound marketing tactic, right? This was really a save me time and headache. And I got to stop answering my phone at 11 p.m. at night to Grandpa Smith that wants to talk through an LE, because I got a 1-month-old baby, right? It's starting to dig into my personal time. So now I'm implementing it for, I probably have a list of 100 things that I use Loom for. It's anything to save time. So, Nate, the pre-approval. So, to save time, really what I was doing was I'd send a pre-approval letter like all of us do, call the listing agent, right? I think that's what every loan officer does. if you're just sending a pre-approval letter, you need to step up your game. At least call the listing agent. But I was like, man, if that's good, right, and I want to be great, what can I do up and above just calling the listing agent? Because a lot of times I'm calling them, leaving them a voicemail. Once again, they're calling me back. It's phone tag. I'm in a meeting now, et cetera, et cetera. So I'm like, let me just use Loom. I can shoot a video, walk them through the pre-approval letter, and I'm shooting the video to the seller and to the listing agent, and I'm selling myself as the loan officer. Hey, Mr. and Mrs. Smith, my name's Dylan Langei at Evergreen Home Loans. I'm the branch manager and a loan officer. I'm the #1 rated lender in Whatcom County. Here are my online reviews. I show them all of my Zillow reviews, my Google reviews, and I say, hey, it's not to pat myself on the back. It's to show you my verified level of service, right? And you don't know me. I don't know you. I want to build trust with that person, right? Because they're trusting me to finance that home, their biggest asset. So I use it as a marketing tool. And then I also send it to the buyer and the buyer's agent. The buyer's agent loves it because, I'm working hard to get this property under contract. And then the buyers love it because they're like, man, you said all these great things about us, right? We got great credit, W-2, been in their job for more than 5 years. They got their down payment in their account, right? They're like, wow, Dylan, you knocked it out of the park. You went above and beyond. So it helps me with client retention. And it also helps me with that buyer's agent, with the retention of them. Or if they don't use me, maybe they start using me. And that listing agent, if they don't use me, it's another little hook like, wow, that Dylan guy, that was pretty unique. So it helps all parties. It takes it one step further. Everyone's doing the phone call to the listing agent. If there's 20 offers on the table and everyone does a phone call and I do a video and they see my face, they see my online reviews, they see my verified level of service, I anticipate we will get the offer if everything else is pretty much equal. But I also use it with my
video.
team. Go ahead.
That video also creates a human connection. They're seeing a face. That's what I like about it so much more than just calling the listing agent. Because admittedly, that's what I do. I up until yesterday, I call the listing agent.
Love it.
Which is crazy to me that not every LO does that either. And for any newer LO that's listening to that, if you know that it's for a particular property, or let's just say that you have a contract come in, you have a buyer's agent, listing agent. If you are not contacting both of those agents from the jump to introduce yourself, like that is such a missed opportunity. You're about to do 30 to 45 days with them. Really important that you establish a relationship, but it is a free shot. It is a free opportunity to build that relationship. And you never know if you jive with that listing agent. That's how I started at the very beginning of my career. Is I would reach out to a listing agent, and back then, like, not a lot of people did that. But I did that because, like, I didn't know anybody. I almost had to. And it was a big differentiator to me. And that's what I've done my entire career is, like, I've tried to find these, like, little bitty differentiators so that I'm doing basically the same as everybody else. But then I've got like 5, 6, 7, 8 differentiators that just set me apart.
Mm-hmm. Yep. Let me add a little piece to that because I've started implementing a script that I think works fantastically for anyone listening to this, for that listing agent. And it could work for the buyer's agent if you don't work with them as well. Typically what I was doing was I was running the transaction, right? Doing the pre-approval letter, all that stuff, closing on time, blah, 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 right? All the stuff that everyone should be doing. Then I was calling the listing agent. Hey, we just closed. Congrats, blah, blah, blah. Hey, I'd love to take you to coffee or grab a beer or whatever, right? Pitch them then. Why not pitch them earlier, right? When you get that purchase and sale in your hand, like Nate, you said, call and introduce yourself. Hey, my name's Dylan from Evergreen Home Loans. Hey, I'm going to send you Tuesday and Friday loan updates via email, right? I assume that you saw my Loom video for the pre-approval letter. Hey, I just want to thank you so much for accepting my client's offer. I'm just really looking forward to working with you and your team. We're going to have a seamless closing. Is there anybody that I should include on those Tuesday and Friday updates? A transaction coordinator, anyone like that? Oh yeah, here's Sally, here's her info. Great. Hey, listing agent, my number one goal is to blow you away through this transaction. Oh, great. Cool. Yeah. Thanks, Dylan. And I always make sure that they don't work with anyone from Evergreen. I never want to step on my own office's toes, right? So you get that cleared off. And then, hey, my number one goal is to blow you away throughout this transaction. Great. Hey, listing agent, if I blow you away, would you agree to coffee or a beer or lunch on me after we close? Oh yeah, of course, Dylan, right? What I've done is I've prefaced the ask at closing, but what I've also done is I've made them now watch my every move throughout the transaction. because I know I'm going to blow them away. But if you don't ask them, they're just like, I'm actually so good that it's so seamless. They actually forget that I was even involved as a loan officer, right? Really it's what I struggle with my team. My loan officers that are very low maintenance, sometimes I forget about them, right? The ones that are just running their own business, I'm like, I need to remind myself to check in with them and just thank them like, hey, you're doing a kick-ass job. And, you don't want to forget about those people. So what I'm doing to that listing agent or the buyer's agent is I'm prefacing, hey, watch my every move because I know I'm gonna produce. And then I'm going to ask you, I'm setting up the ask before it happens. I'm saying, hey, I'm not asking you out right now, right? Going back to the dating analogy, not asking you out right now, but if I perform on X, Y, and Z, will you go out with me? Oh, yeah, sure. Hey, if you do that, yeah, no problem. So there's my nugget. Create a reel on that one.
Yeah, so I was going to say, this is why I knew your name immediately joining Umpqua. This is the reason right here. Like, because people talked of what you were doing. The one downside to all of this right now is I wish this episode was further down the line so we had more listeners. I wish.
Yeah, hey,
I'm going to keep pushing people back to this one. Yeah. But no, I mean, gold, nuggets, all of it. Yeah. Like, and I'll be honest, Nate and I were talking on this of like, the podcast and whatnot. And, as much as this is for inform others, Nate and I get to sit here and we get to learn too. Like, there's information we get to put out for people to learn, but then we also get to be students once in a while too. So all of that is amazing. And you're, like I said, from the beginning, you're doing things the right way, if not better than the right way.
Yeah. And, I want to, like, people listening, like, none of us on here are a mortgage savant, right? You can never perfect this business, but you need to be a lifelong learner. All the stuff I'm talking about, I did not invent, right? I've either heard about it, I've seen someone else do it, and then I've just tweaked the wheel a little bit to fit my personality and fit my brand, right? I'm not creating the scripts. I'm not creating the updates. I didn't create Loom, right? But I'm using these tools in the way that fits my business. And I think that's important for people to know.
Well, and that's one of the things that's held me back that I'm learning is, that I really should be further in my career than I am right now, but it's because I really haven't had many mentors. The mentors that I had, they didn't have enough time for me because they were too busy. And that's not a knock on them. That's my inability to go find other mentors too. So my inability and my maybe hesitation to learn from others is really what held me back. And I've just recently learned that. And that's one of the things that I'm kind of excited about now that the market is somewhat back to normal, is that now I can kind of go back to the basics. We've all caught our breath, and the last 2 years for me they were great. They were a capital injection that I needed. And now I get to go back and like really build the business the way that I want it to be built. And part of what I've learned is I'm reading more. I'm listening to more podcasts. I'm learning from a lot more people now. All that to say, do you have like a quote or a book that really changed the way you either market or you build a relationship or you do this business in general? Like something that really, really resonated with you that you refer back to a lot?
Yeah, I would say, so I'm a huge podcast guy, which is why, shamelessly, I reached out to Kadyn because I wanted to be on this podcast because I think you guys are awesome. But seriously, I listen to at least 30 minutes of a podcast a day, and I do it when I'm working out because I cannot listen to a podcast while I'm working, right? Writing emails, things like that. I either have to be driving or working out so that I can retain the information. Right. I listen to a vast amount of different podcasts depending on what I need that day. If it's hoorah rah motivation, maybe it's a Tony Robbins. If it's a little calmer motivation, maybe it's a Ed Milet. If it's mortgage related, it's Carl White and Steve Kiles. If you guys anyone listening to this have not heard of those guys, it is gold. Steve Kiles has a podcast that is absolute gold. He's a magician at scripting. That's where I learned a lot of my scripting from. And he's part of Mortgage Market Animals. I'm not a part of that. I'm not signed up for that, but it's just, shameless kind of plug to that podcast if you guys want to learn and grow in the mortgage space. And then, book wise, I can't do business books, unfortunately. I'm like a James Patterson, entertaining, kind of nonfiction book guy. My one quote, though, that I'll say for mortgage, and I don't know who said it, it has to do with work-life balance. And I know you guys had a podcast on this. And the quote is create structure so you can have freedom. And I think that is super, super important in our business, because if you talk to anyone that knows me, I'm an absolute OCD freak. I mean, I'm structured. My calendar, my life, if somebody wanted to murder me, I would be the easiest guy to murder, because I do the same thing like every day. I could get assassinated, no problem. But it's important because we're pulled in so many different directions in this business, and our entrepreneurial minds are like, I want to do TikTok and video and direct mail and this, and now golf with this guy, and I want to reach out to this realtor, and then we do stuff for like 2 weeks and then we never do it again, and we haven't created a habit. I say that a task becomes a habit after doing it for 6 months. You have to do it for 6 months, whether it's video content, whether it's Tuesday and Friday email updates, whether it's scripting to the listing agents that we've been talking about, whether it's going out on the street corner and flipping a sign like the Liberty tax person, whatever it is, 6 months to make it a habit. There are certain things that I cannot turn my brain off at night if I haven't done it, because they're a habit now. Create structure so you can have freedom. And I think it's important to dial in your day, dial in when you're going to start, when you're going to end. I wake up, granted, for everyone letting you guys know, I have a 3-week-old baby. So take this for a grain of salt, because I was a little bit better at this when I wasn't up all night. But
you wake up all the time.
Yeah, I wake up all the time now. So who knows what my schedule is. But, I was waking up at 6:15 in the morning, working out from 6:30 to 7:30. I'm in the office at 8 to 5. 5 o'clock, I come home. From 5 to 7, I do not do anything work related. I spend time with my partner, the kid, right? I eat dinner. I focus on, maybe I clean up some stuff in the house, whatever it is. And then after 7, right, I can tune back in, maybe finish a few emails, return some stuff. That's a general vague kind of calendar. But even my personal life is on my work calendar. And then if anyone on here doesn't have a shared calendar with their significant other, I just got one in the last month, that's a must-have too. Once again,
oh my God, I need to do that.
So you can have freedom. Create structure so you can have freedom. If you do not put on the shared calendar that you have poker night with the boys or golf day with the guys or whatever it is, that will not happen. And now having a kid, and Nate, you probably know you got 2-3 kids. You need to put it on the calendar. It has to be on the shared calendar, or it's not happening. You're having no freedom. So that would be the quote that I live by.
I don't have a shared calendar with my wife because, again, I don't want to be assassinated, but maybe I will. No, we're getting to the stage of our parenting years of where, we've got basketball games, we've got gymnastics, we've got all this, that, and the other. Mm-hmm. And we have trended towards having a shared calendar. We haven't taken that last dive into it, but for sure. And this sounds crazy. I'm 10 years into this, and I really have not embraced the idea of a calendar until the last year, which is wild. And I'm sitting there because I was stuck in 2020, and I was sitting there man, I feel like I've hit my ceiling, and it's either for me to do more loans, I have to work more hours. I don't want to work more hours. I've already done 50. I've already done 60. I've done 80, 90 hour work weeks. I've done that. I did that for years. I don't want to do that anymore. Got kids. I want to go home and see my kids. And so the structure creates freedom is such a foreign concept to me, but it's something that I've learned in the last year and a half. It's a must-have. That calendar is a must-have. It's weird. It took me 10 years to kind of really take this seriously.
Well, I'll just say 2020 and 2021, we can all nod, and every loan officer was the best monetary, production-wise, whatever you want to call it, the best years we've ever had. I will say personally, physically and mentally, they were the worst years of my life.
100%.
I was on the brink of not enjoying this job very much anymore, because I got away from that structure. I got away from having a plan, having a day, and also having a work-life balance. I was working from, and we probably all were, 6 a.m. till midnight, because you text 10 people to refi, 9 of them say yes. 8 of them want to lock, and seven of them are approved, and you got to get those through. So it's just, I want to gear up for that next refi boom. And I don't want to physically and mentally be in that same place that I was in, where I wasn't working out. I wasn't listening to podcasts. I wasn't reading. I wasn't drinking a gallon of water a day. I was going to too many happy hours. I was drinking too much alcohol, like all these things that were just not helping me physically and mentally. And in this business, you need to be on your game every minute. You don't know if it's a business partner that you've been trying to court for 2 years is going to call you the next minute, and you're going to have to pre-approve that client in 30 minutes. You need to be on your game, and you need to be motivating, and you need to be a magnet for other people. People want to work with people that they like and that they're motivated by. When you're not filling yourself with good information, when you're filling your, whatever it is, drinking too much, using nicotine, whatever your vices, when you're not on your A game, people feel that, right? Your clients feel that, your business partners feel that, and your business is going to hurt. Your business is going to go down from that. So the big thing, that I'm trying to, last year, my big hairy goal, as well as integrating my LOA, was actually my personal health, mentally and physically. And I really honed that process in. And part of that was creating structure so I could have freedom. A lot of that was, what am I eating? What am I drinking? What am I listening to? Instead of listening to rap music or EDM on the way to the office, I'm listening to podcasts, motivating people, good people, right? So just those little tweaks can really make a huge difference.
I have a proposition, and I think I have the idea for your next social media. Like, the social media year for Dylan is right now. You need to start making like motivational morning loan officer specific videos, because I almost wanted to run through a brick wall.
Well, it's great. I love your when you do it every day, your daily kind of calendar, Kadyn, that you did. I love that. Like, I mean, I just started following Nate, recently, but back to like not reinventing the wheel. I loved Kadyn, like just showing how packed our calendar is, right? And like showing what you're doing every day. I'm like, cool. Okay. Kadyn and I are doing the same thing, even though we're in different markets and work for different companies. Like, cool. I'm on track. Mm-hmm. Like, I'm doing the right things. So anyway, yeah, maybe I'll do it. I don't know. I love this kind of stuff. I love this kind of content creation. I think that you guys are inspiring. I hope that, what I'm saying is inspiring. It's just, there's so much wealth of knowledge out there, and I just want to see this business done the right way. And I think you guys 100%. Will probably agree to that.
Well, and it's such a competitive business that I think that when you meet someone that isn't just worried about themselves and they are willing to give, that it's unbelievably refreshing. And they're willing to put themselves out there to help other people, whether that be a client, whether that be a realtor, whether that be other loan officers. I think there's too many people in our business that they are worried about number one. They are only worried about themselves. So like, I would love to see some of the motivational stuff. Like, I think you've got a passion and a talent there that needs to be used, man. I would love that. And then, I mean, I know we're kind of getting close to wrapping up, but I wanted to give you the opportunity to plug your pod, man. Talk a little bit about what you got going on over there.
Yeah, I mean, this is if you don't have a podcast going on right now, dude, who are you, right? Like, if you're
even 2023, if you don't have a podcast,
yeah, like, come on, dude, what are you doing? So me and a good buddy, it was funny, similar to your guys' story. Anytime we talked on the phone, we'd kind of, shoot around different ideas for an hour, and we're like, dude, let's just create a podcast and get this content out there. And what we're really passionate about is breaking down successful people's stories and just seeing, similar to mortgage, right? Successful mortgage loan officers. There's so many different avenues and different paths to being successful in this business. We took it a little bit more broad because, he's not in mortgage. So we co-host a podcast, The Tipping Point. And really what we're doing is finding successful people. Our first episode dropped yesterday or 2 days ago. And it's with a guy by the name of Oscar. He's a professional soccer player. And what we do is we hear their story and we break down the tipping points and those decisions that they had to make to ultimately become successful, ultimately shut down the doubters, ultimately bet on themselves, And I just think it's inspiring. It's motivating to hear. And yeah, we took it really broad. We've got a couple really good guests coming up that I've been reaching out to. And yeah, it's been super awesome. The more I listen to podcasts, the more I want to share other people's stories as well. So many people have cool stories, just awesome paths to success in different businesses and avenues. And so, yeah, it's a Tipping Point. It's on Spotify, YouTube, Instagram. Our Instagram's Tipping Point Pod. And it's on Spotify and all the major platforms. You can find it. Our first episode just dropped. So I would love some listeners, some reviews, some feedback. If you've got awesome people that want to come on, we're open to it. So thank you for that.
And I already made the note. I'll plug it in the comments below or in the description below. See, I don't even know cool. YouTube yet. I'm saying comments already. Jeez.
Appreciate that.
Of course. No, I mean, we appreciate you. I appreciate you. Like I said yesterday, shooting your shot. And you're like, guest number 2 right here. And
love that.
Like 2 years worth of waiting to talk to you was well worth it. So I've learned so much from you in the last 2 days. Hopefully we can just keep talking and keep sharing ideas going forward. And we're plugged into the same people. So I know we'll cross paths eventually.
100%. Appreciate you guys having me on. Let's blow this podcast up. Let's share this thing. And, I hope it helps somebody. It's the smallest changes that can make the biggest difference. And I think that's the biggest piece for people to remember is take one nugget from this, implement it today, and just see how it works out. So
absolutely.
Boom.
Well, boom. Thank you again. This was More Than Mortgage, and we'll see you on the next episode.
Peace.
Well, dude.